After 5 years, I've finally solved liquidity and I've condensed it into a simple 3-step formula that literally anybody can use to become a consistently profitable trader. It is by far, hands down, the highest probability setup in all of trading. Now that might sound like I'm lying, or even that I'm delusional. If you don't believe me, go look at all these traders on screen now who have already become profitable. It's worked for them, it's made me profitable, and it's going to make you profitable too. Now the reason why this strategy actually works is because it's founded on logic. It's founded on the only reason why these markets move, which is simply for liquidity. Now for those who don't know, liquidity is stop loss orders. They're the exact same thing, and these markets are only going to move for where the money's at, right? It's only going to move for where smart money, Goldman Sachs, big banks, hedge funds, central banks can get into and out of their position. So what I'm about to tell you here works on every single market imaginable. It doesn't matter whether you live in India and you trade the Indian stock market, it's going to work, right? If you can find it on TradingView, this will work because like I said, all markets move based off liquidity. If it's listed on an exchange, it moves based off liquidity, even penny stocks for the person who was asking. So now that we've got out of the way, what you're going to do for whatever market you trade is you're going to get onto the 4-hour chart, right? And you're going to ask yourself this almost stupid question, but trust me, this works, right? So let's just imagine you're on the charts at this point right here. You're simply going to ask yourself this question: is price most likely at this point here to continue upwards and take out this high here, where there would be lots of stop loss orders, lots of liquidity? Remember, support and resistance, people are going to put their stop loss there. Is price most likely to do that, or is it more likely that price is going to come all the way down here and take out this low here, or even this low here? Right, let's just remove this. Which one's more likely do you think to happen? Right, no one knows for sure, no one has 100% win rate, but what's more likely to happen? Is price more likely to go for this high, or this low, or this low? Right, hopefully, pretty obvious price wants to go for this high. Now, if you're ever struggling with liquidity and determining, which high or low to actually look at, simply use the indicator. It does it all for you, but like I said, right, the indicator will add to the win rate, but again, you can become profitable using this with just naked charts. But essentially, which high or which low is price most likely to go for? Very, very unlikely that price is going to come all the way down here and take out this liquidity. Very likely that price is going to go for this liquidity here, which is a 4-hour high and a daily high, right? Buy side liquidity. Again, terminology does not matter, right? All we need to know is that price is most likely to go for this high here, right? So we have our first step in this 3-step formula, which is going to be bias, sweep, entry. So the first thing we always need is our bias. Now this right here, this almost weird question of which high or low we're going to go for, has given us our bias. We know our bias, we know our likely direction for the market. What do we need to do now? We need to get onto our entry time frames and we need to look for a sweep. Okay, so here we are on the 5-minute chart, right? And let's just imagine you want to trade the 5-minute or even the 1-minute chart, because I'm going to show you the entry on the 1-minute chart. Now here's that big daily liquidity, that 4-hour high that we were talking about, all the way over there in price action, right? What we just talked about. Now remember, our bias is bullish, right? Price is likely, very likely to go towards this high. Like we said, very unlikely it's going to go all the way down for that low. However, just because we're bullish, we cannot simply just buy the dip on a fair value gap and ride price up. If trading was that simple, I wish it was. If it was, we would all be millionaires, but that's not the case, right? Instead, we need to wait for something called a liquidity sweep. Now, if you don't know what a sweep is, go look at this picture on screen now, which explains it. It's probably the hardest thing in trading. Like, I'll be honest with you, it's probably the hardest thing in trading. It took me years and years and years to actually fully understand it. And essentially what it is when you're bullish, which we are, right? Remember, bias is always number one. That's why the 3-step formula is bias, sweep, entry. Bias is always number one. Now that we're bullish, what a bullish liquidity sweep looks like is this. Price goes up, it goes down just below an old low. It doesn't go massively all the way down here. It goes just below an old low. It quickly shoots off in the opposite direction. It does not need to be a market structure shift. So price could, let me just make this clear, price could be down here or down here. And then what happens is price will come down and give smart money traders a high probability entry and ride right off. The price will shoot right off towards the liquidity target, right? Now this is why, let's imagine you enter on a fair value gap here and it fails, but then another fair value gap works, right? This is why some fair value gaps and order blocks fail, others work, because you don't wait for a liquidity sweep. We need to be waiting for a sweep, which is simply a stop run, right? We need to wait for stop runs to be raided, purged, grabbed, whatever you want to call it. We need to wait for a stop run before we enter, because this gives us the highest probability setup in all of trading, right? There's nothing more, there's nothing that has a better win rate than this, because this is actually rooted on logic, right? Real logic on how these markets move. So, and the whole point of waiting for a sweep is so we know we can enter on a high probability trade we can put our stop at a very, very safe area, and then we can target liquidity, right? That's the whole point, right? If we put our stop here on a fair value gap and we're bullish, and we want to buy the dip, price will come, take out our stop loss, and go straight to take profit. So that's what a liquidity sweep essentially is. Now, this is a fairly difficult example. Let me just remove this. And I always like to give you difficult examples, because if you can understand difficult examples, you will understand easy examples. And when easy examples come, you'll make a lot of money very, very quickly. So here we are in price action. Can you see any sort of liquidity sweep around here? Can you see any sort of low that gets taken and price quickly shoots off? Now, there's not really a retracement here, which is why I'm going to go into the 1 minute chart and show you it. But if you look at this bit of price action here, now I know it's messy, but again, like I said, it's a difficult example. So if we look at this price action here, let's just remove the indicator and let's just turn this off. I want to show you how to do it in like just naked charts, right? So if you don't have the indicator, this is how you would do it. Let's make this clearer too. You see our price. Now remember, most important thing is we are bullish, right? If we were not bullish, right now we'd be gambling. We have no idea what price is likely to do next. But because we're bullish and we know we're targeting that major high on the 4 hour chart, this is why this works. So we have this low here, price goes up, just takes out this low, only slightly, and then quickly shoots off in the opposite direction. That right there is our sweep. Right now, again, if you struggle with sweeps, simply just get the indicator up like this. Let me get the settings up. Go down and make sure you've got bullish regular sweeps and fair value gap sweeps enabled. Now it's bullish because our overall direction is bullish, right? So really, really important to understand that. And we'll keep liquidity on actually. Yeah, we'll keep liquidity on. So again, here's the 4 hour high that we talked about right at the beginning. So we have our sweep, right? We have our sweep. So the 3-step formula: bias, tick, sweep, tick. Now we just need our simple entry. So what we're going to do now is, now that we've got our sweep, is we're going to get onto the 1 minute chart. And we're going to start looking for our entries. Okay, so here we are on the 1 minute chart now, because I want to give you an entry on the 1 minute. And here is essentially the liquidity sweep that we talked about on the 5 minute chart, but shown on the 1 minute. So price goes down, goes up, takes out the low. Remember how I said we want to see price go just below the old low, shoots off, and gives us our retracement. Now, obviously, this isn't a crazy, huge move in price action, and price quickly goes down. But again, this is realistic for trading, right? This is what you're going to get. So here's our sweep. At this moment right here, once there's a sweep, we want to start looking for our entries. And like I said, the indicator will plot it for you. However, if you're not using the indicator, what we want to see is we want to see the first bullish fair value gap that forms in the opposite direction, right? In the bias direction. Like 4 hour high, which is, you can't even see it, it's all the way up there, right? We want to see a bullish fair value gap form in that direction, because that is smart money, whatever you want to call them, telling us that we're on the right side of the market. A fair value gap, for those who don't know, essentially, if there's a big fair value gap, it means that price is quickly moving towards somewhere, right? It quickly needs to move somewhere. So really important. I don't think you ever hear anyone actually explaining why a fair value gap is important. It shows that price quickly, look how aggressive this is. Price quickly wants to move somewhere. So we have our sweep. We're not interested in going in shorting or selling. We're not interested in any of these bearish fair value gaps. We're interested in the first bullish fair value gap that forms. Now you can enter on this bullish fair value gap if you want, but I'm just gonna give you a few entries here. You can enter on this order block here, or you can do what I do, what Atif always does, simple Fibonacci. Just because the fair value gap here is quite big, you'd have a fairly wide stop loss. I know it's the 1 minute chart, but again, if you can use the 1 minute chart, you may as well get a nice entry, right? Because like you can get a 3-to-1 easily on the 5 minute chart. So for me, like if I'm gonna get on the 1 minute chart, I'm probably gonna target a better risk to reward or demand a better entry. So anyway. Again, for those who are wondering, 0.705 for the Fibonacci. There's no magic in that number. It's just it's just a number in the Fibonacci that I use. And the real magic is the bias sweep entry, right? That's the real magic. So for your stop, this is the only thing that you need to do for your entry. Your stop is always fixed at this low here that causes it to sweep, right? This low right here is what swept that low. Price shoots off. Entry, right price off. You always put your stop at this low. There's no point waiting for a sweep if you're going to put your stop here, right? There's no point doing that whatsoever. And you may as well just ditch the sweep, right? But we need to wait for a sweep because we need a high probability sell. Anyway, here we are. And you're going to target at least a 3-to-1, right? Minimum, if you're going to trade the 1 minute chart, in my opinion. I know there are traders who, who use a 1-to-1 and make a lot of money. But for me personally, and probably for you, you probably want to target a 3-to-1, right? So you can target 3-to-1. Or if you want to get creative, zoom out. And this is how you use liquidity, right? This right here, and for those who trade indices, this is AM session high, right? This right here, easy peasy liquidity target on the 1 minute chart. this can be your target, right? Which is crazy, isn't it? Almost a 1 to 10. How crazy is that? Almost a 1 to 10. Yeah, that's how, if you ever wanted to pass a prop firm, or, you know, you wanted to gamble, or, you know, whatever you want to do, right? You want to flip your account, this is how you do it, right? Now, I'm not recommending that. I recommend, Atif recommends you be, you know, very, very safe and do your own due diligence, right? Don't come sue me, but hey, look, listen, right? It's your money. You do what you want, right? If you want to flip an account, this is how you actually do it. Very, very high probability setup this is, but there's always the chance that you can lose. But if you've got the bias, you've got the suite, you have a simple entry plan, you can make all the money in the world. And like I said, if you want the indicator, it should be in the pinned comment down below and the description. And if you want to learn more about liquidity in general, go check out this video on screen now where I teach you everything you need to know about liquidity.